There have been questions that have been raised, Walter, about whether Elon Musk can bring this suit. I mean, obviously, if you're looking at the founding documents, that's the best legal argument that they have in this, right? But others in the nonprofit world say that typically, if you're questioning whether a nonprofit has strayed from its mission, that's really the responsibility and duty of attorneys general. We've spoken with other people this morning who say that they hope this lawsuit brings attention and maybe puts some pressures on some of those political types like an AG.
Yeah, I think you're already seeing the attorneys general look at this. And yes, the law is pretty unclear in the sense of can you sue a nonprofit for becoming a for-profit? But as Musk said, hey, wait a minute. If this can happen, anybody can do it. Instead of saying, I'm going to raise money with venture capital to start a company, you say, I'm going to start a nonprofit. Give me tax-deductible dollars, and then we'll turn it into a profit-making thing. So it doesn't smell right.
No, correct. I guess I just wonder what you think the next logical step is, what a court does with this lawsuit and what it spurs from politicians who would be much more interested in sitting up. I guess this does have the potential for bringing discovery for any of those politicians looking at this.
Yeah, I'm not sure this lawsuit will ever go to a full trial, and he's not asking for very clear remedies. If you read the lawsuit, he's not saying he wants huge amounts of money. I guess he'd get the money he put into the nonprofit back, but that's not what he wants. He wants it to make it so that it once again becomes a nonprofit and that it breaks the contract with Microsoft. If you read deep into it, it says that contract with Microsoft should be null and void now because ChatGPT-4 and beyond is going to be artificial general intelligence. This is a very technical thing, but it's not just what they contracted for. It's going to be able to do almost anything. It's going to be able to reason and have intention. And this frightens Musk. And he says he wants as a remedy for OpenAI no longer to have this contract with Microsoft.
I mean, that raises some pretty serious questions for investors involved in all sides of this. Microsoft, about the biggest technology company out there, one of the biggest public companies out there, taking on Sam Altman and OpenAI, which is seen at the front of the AI race. All of this happening with one of the world's richest men on the other side of this. How does this break down? And what do you hear just in terms of, I guess, scuttle from other investor classes on this?
You know, for 12 years, Musk has been worried about just 2 or 3 companies dominating the AI space. And when he and Altman started meeting back in, 10, 12 years ago, they said the more companies that get into it, the safer it's going to be. Now, that's a philosophical argument. I think he read Isaac Asimov and other science fiction. And he even talked to President Obama about it. So what his main worry is that the way this is all shaking out, you're going to have Google and Microsoft totally dominating this industry.
Is this just another distraction with OpenAI and this lawsuit?
I think it is, Dom, and I think the market will quickly turn to other issues. I mean, I thought the more important news was the announcement that they are reducing or adding incentives in China and to lower prices and increase demand. But, his distractions would probably put most of us under the table, but he just moves on. And I was at the Mega Factory, thanks to the folks at RBC this week, and there is a lot of promising stuff going on at that company.
What exactly is the promising stuff? And we already know that you're bullish, and we know that you're long the stock, and you have a vested interest in this stock going higher. But what makes you that much more bullish? What did you see that made you feel like this is something that you want to keep on accumulating?
Well, so the Mega Factory makes battery storage, basically utility-grade battery storage. So these big walls of batteries that will really change the way that electric utilities operate and should reduce outages, as well as all the forest fires that we've been seeing over the years. In the Master Plan 3 presentation that Tesla made a year ago, they estimated that battery storage could account for 35% of total fossil fuel reduction. That's versus 21% for the car. Add to that, they only have a 15% market share, but they have a cost advantage of about 30% due to their vertical integration efforts and cost reductions, obviously. And so this is now the fastest growing, most profitable business at Tesla, and some estimate will be worth 1.5 times the car business in the not too distant future.
What that's a huge thesis for the bull side of things. One of the reasons for the downside as of late over the shorter to medium term for Tesla has been the concerns about China. Hyper-competitive market out there right now. We have a lot of maybe even price wars, you want to call them, going on over there right now, and a slowing EV demand picture here in America. How does all that counter out? And maybe the price does reflect why those issues have become more front and center.
Yeah, no, it's a real concern. I mean, we initiated our position during the last distraction, which was the X acquisition. We bought it last January at about $105 a share. And that was a short-lived distraction. And so I think what you have to pay attention to with this company is where is the technology going and where are they going to see the growth? And if they can grow this business half as fast as they think they can, it will solve so many problems with renewables and usage of renewables at, on a 24-hour per day schedule. And so they are already monetizing it to a great degree. It's a nascent industry. So I really think that's where investors are missing some of the focus and what they're reacting to the headlines on the slowing EV demand around the globe. And I get it. I mean, I just leased a car in the UK and it was a nightmare trying to find the charging stations, not being familiar with the territory. So
Sure.
They're not for everyone. But I think we learned people want to buy Teslas more than they want to buy EVs.
Welcome back, viewers. Today we're diving into some big Tesla news involving Elon Musk and OpenAI. You just watched a video where Nancy Tengler discussed how Musk is suing OpenAI over their AI chatbot. This could have major implications for Tesla's future and stock price. Thank you for watching InvestMinder. If you enjoy our latest investing videos, please remember to subscribe and hit the notification bell to stay up to date. Before we go further, a quick disclaimer that we are an entertainment channel and not professional financial advisors. Please do your own research before making investment decisions. Now let's dive deeper into this Tesla and OpenAI situation. As we learned, Musk is alleging that OpenAI misled him during funding conversations by not revealing the full capabilities of their AI chatbot. This chatbot could compete directly with Tesla's AI and autonomous driving technology. The big question is, how could this impact Tesla's business and stock trajectory? Tengler believes this lawsuit itself won't matter much and that Tesla has more pressing issues like incentive changes in China. However, if OpenAI's chatbot does end up being a major competitor in AI and autonomy, that could significantly hurt a key part of Tesla's future revenue plans. Stay tuned as we analyze this further and discuss things like Tesla's promising battery and energy storage business, concerns around EV demand in China, and more. This OpenAI situation may end up being just another Elon Musk distraction, but it could also signal challenges ahead for Tesla's AI and autonomy, a technology many believe is critical to its long-term success. As we dig deeper into this situation, let's look at why Musk and Tesla could view OpenAI's chatbot as a threat. Tesla has invested heavily in developing industry-leading AI and autonomy for its vehicles. Fully self-driving cars are a key part of Tesla's master plan and its vision for the future. Analysts predict that autonomy could make up a major portion of Tesla's profits in the coming years, as they license out their superior self-driving software. However, developing safe and reliable full self-driving is highly complex, expensive, and competitive. Companies like Waymo, Cruise, and Mobileye have fallen short in developing fully autonomous vehicles thus far. Their systems seem to struggle when encountering unexpected road situations, often just freezing in place and creating unsafe conditions. In contrast, Tesla's substantial real-world fleet data from hundreds of thousands of vehicles on the roads today gives it a major advantage in autonomy development. While not perfect yet, Tesla's autopilot and FSD beta significantly outperform competitors in capability, safety, and driver satisfaction. Now enter OpenAI's chatbot, which showed impressive human-like responses and capabilities for understanding and responding to complex questions. While focused on dialogue for now, the underlying technology likely has broad applications, including for autonomy. And since Musk was an early investor in OpenAI, he may feel slighted that they did not disclose the full capabilities to him as they sought more funding. This gets to the trust and transparency issue at play in the lawsuit, but does OpenAI's chatbot actually pose a threat? Well, it depends. The chatbot displayed mastery of language but hasn't shown applied capabilities in areas like driving. However, if OpenAI trains similar models on visual data for autonomy, it could accelerate their entry into the self-driving race. And with Microsoft now heavily backing them, they have ample resources to become a player. The jury is still out, but OpenAI's technology does appear highly versatile, and they now have the backing to commercialize it. For Tesla's part, they need to keep rapidly innovating to maintain their significant autonomy lead as companies like OpenAI look to catch up. Shifting gears now, let's discuss some of the other key issues impacting Tesla's business, beyond the OpenAI situation. As Tengler mentioned, Tesla recently announced some changes to incentives and pricing in China aiming to boost demand. The Chinese EV market is extremely important for Tesla. China accounted for almost 25% of Tesla's revenue in 2022. However, Tesla faced strong competition there from domestic EV makers like BYD. And EV demand in China slowed considerably over the past year as the economy weakened and COVID lockdowns persisted. Tesla cut prices for its Model 3 and Model Y vehicles in China by up to 13.5%. This partly reverses some of the price increases they enacted over the last 2 years. The goal is to make their cars more affordable and competitive for Chinese consumers. In addition to price cuts, Tesla introduced other incentives like insurance subsidies and referral awards to entice buyers. Will these measures succeed in re-accelerating growth? It's hard to say for sure. Some analysts argue that Tesla overpriced themselves in China, and that these moves were necessary to sustain volumes. Others counter that the price cuts could significantly hurt Tesla's profit margins in the near term. We'll be keeping a close eye on China order and delivery numbers this quarter to see initial demand response. Beyond China though, Tesla does have some major opportunities centered around their battery technology and energy storage solutions. As Tengler discussed, Tesla's next-gen battery and megapack storage products could be game changers for utilities. Their 4,680 battery offering promises major cost and efficiency gains versus older lithium-ion designs. Add their vertical integration and some see their storage business alone rivaling their EV business within the next few years. Not to mention solar panels and virtual power plants that leverage autonomous electric vehicles as dynamic storage nodes. Exciting stuff. While demand fluctuations, competition, and lawsuits pose challenges, Tesla continues innovating at a rapid clip on the technology front. Zooming out now, let's explore the key factors that could determine Tesla's future trajectory as both a business and a stock. First is simply how rapidly overall EV demand grows across the globe over this decade. Despite improvements, electric vehicles still represent only about 5 to 10% of annual vehicle sales. For Tesla to keep growing at a 50% plus clip, consumer adoption of EVs needs to accelerate significantly. Regulatory support like stricter emissions rules and EV purchase incentives should aid adoption. But macroeconomic conditions also heavily influence auto buyer sentiment and willingness to go electric. A weaker economy typically results in more consumers defaulting to cheaper gas-powered cars, which ties into the next factor: affordability. As we saw in China, there appears to be some price sensitivity that could limit demand if Tesla's brand remains a luxury out of reach for the average consumer. Improving cost efficiency while still providing aspirational vehicles is key. Next is autonomy, Tesla's secret sauce, and a pillar of their future value proposition. With their AI lead today, autonomy offers them potential for high-margin licensing revenue as the software gets deployed across millions of vehicles. But we saw how hungry competitors threaten their pole position in autonomy development. Finally, we have competition itself, especially in China, which is forecast to become the world's largest EV market this year. Tesla dominated over the past decade as a vertically integrated innovator. Yet local players like BYD now challenge them, leveraging low-cost labor and supply chains. And giants like Toyota, VW, and GM are all revving up their EV game as well now. If Tesla can nail affordable, desirable electric vehicles matched with industry-leading self-driving software, while fending off rivals in key regions like China, then their ceiling remains very high both for auto volumes and stock price. But with a premium valuation today, the path narrows for Elon and company. We'll see how 2023 unfolds. As we reach the later stages of this analysis, let's shift to discussing Tesla's current stock valuation and what it may signal about future returns for investors. Despite the recent stock price decline, Tesla still trades at a very high trailing 12-month price-to-earnings ratio of 48x. This lofty valuation bakes in massive growth expectations. However, it leaves little room for error and increases risk should Tesla stumble operationally. Bullish investors might argue that Tesla deserves a premium as a disruptive industry leader. Software-based margins from autonomous driving could also boost earnings substantially if Tesla maintains its AI advantage, not to mention adjacent renewable energy opportunities. But skeptics see a company potentially past its peak growth, still being priced for perfection during an uncertain economic period. China competition weighs heavy here too, given its importance for Tesla's global volume ambitions. Bears would say the risk-reward is out of balance. Zooming out historically, Tesla has whipsawed between periods of extreme bullishness and stretches of sudden pessimism, focused on production setbacks or demand worries. The truth usually lies somewhere in the middle. While an innovative force that retains key competitive strengths, Tesla also faces risks from execution missteps and macro conditions affecting sales. Balancing these factors is no easy task. As to the stock, pragmatic investors may aim to buy Tesla during temporary broad market or company-specific negativity that pulls back the share price. Waiting for dips provides a better margin of safety. However, trying to time stocks perfectly is difficult. Dollar cost averaging over time can also smooth out volatility swings. In closing, despite some lingering overhangs around economy and competition, Tesla remains well-positioned as a long-term industry leader. But balancing valuation risk is prudent in the current environment. Continued innovation and global EV adoption seem likely to reward patience. We've now reached the end of our deep dive exploring the future outlook for Tesla. We reviewed the implications of Elon Musk's lawsuit against OpenAI and their advanced chatbot, then examined key factors like China demand, battery technological leadership, self-driving progress, and valuation considerations.
Hope you found today's analysis helpful as you look for profitable new stock opportunities. This was InvestMinder. Remember, knowledge equals profit in the stock market. Thanks so much for watching, and please hit that thumbs up button if you got value from this video. Make sure you click to subscribe as well to get our next videos when we reveal the best new insider stock purchases. Invest wisely, trade carefully, and we'll see you next time. Disclaimer: InvestMinder is an independent stock market commentary channel for entertainment and basic informational purposes only. We are not licensed financial professionals and do not provide personalized investing or financial advice. P.S. If you stayed watching until here, you are awesome. Thank you for enabling me to keep making these videos with all the likes and subscribes. Have a great day, and we love you all.